Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, and let's talk about, what is happening, what we can expect moving forward from Tesla itself, of course, moving into next week, a pretty big week next week as well. So that's going to be important to understand. A big week-ish because it's leading up into earnings. The week after that, of course, is actually earnings itself. So I'm looking at the aftermarket price. We're kind of going up a little bit in the aftermarket, because that's actually just reduced the prices of full self-driving from from $199 to $99, and I guess the market's seeming that as bullish, which is good to see. Now, with all that being said, though, let's just get into it. If you enjoy, don't forget to hit that like button. This is not financial advice. I am not a financial advisor, and of course, my membership section on YouTube is live. The link is down below. If you're interested, for just $2.99 a month, you get access to all my intraday thoughts, posts, updates on Tesla every single day. The market is open, so if you're interested, again, the link is down below and options flow, of course. But let's just get right into it. Tesla closing the day down actually 2%, closing at 171 and 171 per share with 5 cents on top of that, which is going to be pretty decent, honestly, when you take into account how the market performed, right? QQQ down about 1.6%, SPY 1.4%. So in my opinion, Tesla performed, decently, honestly, respectably, I would even argue today, relative to, of course, the bloodbath we had in the markets today. There's a lot of fears around a potential like World War III essentially happening over the weekend with, I think it was Iran attacking Israel, if I'm not mistaken. Don't quote me on that, but something like along the lines of that. But regardless, let's just talk about Tesla. So this aftermarket price is just distracting me a little bit here. Let's talk about it. So let's start with the daily. Actually, let's start with the weekly first, right? We had, obviously closed the week, right? So let's talk about the weekly candle here, right? So there's a few things to discuss here and, what we can expect really moving forward off of it, right? So first and foremost, right, obviously, as you can see, we had this, descending wedge. So you can argue that, we have broken out of, right? And on the weekly, it looks a little bit less convincing, honestly, right? It's a little bit less convincing. We're kind of still like right in the middle of that, but with this after hours price action, that could be what we need as, the catalyst to, more convincingly break out on the weekly candle, which is good to see. But the candle itself on the weekly, unfortunately, not the best looking candle for the bulls, unfortunately, mainly because there's a long wick at the top, right? There is an absolutely astronomical wick at the top, right? Showing almost like a doji candle, which in this case, in my opinion, kind of shows indecision, right? It kind of had it over here as well, and even over here. And we did get some negative follow through after that, right? But to me, this mainly just shows indecision, in all honesty. So we'll see how this actually, translates moving forward next week. But that's the main way I'm looking at it as of right now, right? But again, the main points I do want to explain or showcase, I guess, on the weekly is just the MACD is flattening, right? MACD is flattening. We are getting a bit of a bullish divergence even on the weekly as well, which is good to see, right? The stochastic is, getting pretty close to crossing over, if not arguably ever so slightly already crossed over from, bearish to bullish. So there are some nice momentum situations, if you will, building here on the weekly candle and on the weekly chart, which is great to see. But with that being said, of course, we want to be careful, right? And the reason I want to say we want to be careful is because we have earnings right around the corner, and I'm sure we all know how Tesla likes to perform post earnings. Spoiler alert, it likes to fall most of the time. Maybe this time will be different, but who knows? And go back to the daily chart. The daily chart is a bit of a clearer picture, in my opinion, right? Where, we did actually break out of this descending wedge, or this descending, it's a wedge, right? Descending wedge. And, and it's looking pretty good, right? Mainly because number one, we had a breakout, we came back. We tested that yesterday and the day before on these two candles with a pretty nice looking candle yesterday. And today, relative to the market, in my opinion, Tesla held its own. In all honesty, I think Tesla could have been down like closer to 3% easily today if the market, with the market like this rather. So the fact that it was only down 2%, in my opinion, is, a plus for the bulls. Now, with that being said, we are still roughly, getting rejected by this volume profile, but we're also holding the bottom of this volume profile. You can see this massive increase in volume right here. So this is a pretty important kind of dance that we're finding ourselves in right now with this aftermarket price action kind of pushing back up towards the top of that, volume profile. But again, don't forget, we still have this 175 level above us. That's crucial to understand that, we need to break that. And probably the most important levels, like I've been saying, and I will continue saying until one of them breaks, is of course 183 and 160. That's the ping pong level right now. That's the level we're just simply going back up and down between. And until one of those breaks, we're just going to be range bound. And honestly, it most likely will even potentially take up until earnings for it to really pick a direction as to where it's going. I'm personally leaning bullish here. I think it looks more bullish than bearish. If someone had like a, whatever pointing to my head and, they're like, pick a direction, right? I'd pick bullish. I would pick up, but again, I wouldn't say it's by a significant margin. It's probably like a 60% bullish, 40% bearish, maybe even like a 65-35, something like that. But I'm definitely leaning bullish. I will say that mainly because I like this breakout. I like the divergences that we have setting up here, right? Beautiful RSI divergences, even a stochastic divergence, MACD divergence, breakout of the wedge. It's looking pretty decent. And this price action after hours is supporting that right now. So, and of course, holding well today relative to the market. So the only thing that can really, in my opinion, ruin Tesla's momentum here is the market correcting, is the market crashing. Will that actually happen? Who knows? But I wouldn't bet on it, especially if nothing really happens over the weekend in terms of this World War III, fear that we had today in the market, right? So that's kind of what I'm seeing there overall. Now let's go over to the 21 EMA. 21 EMA, keep in mind, we are still below it, right? The 21 EMA currently sitting at about 174. We're still having a lot of issues, closing and holding. That's why I always say break, step number one. Close, step number two. We got that a few days ago here, right, on the Tuesday. Step three, though, arguably the more important one, hold. We want to hold, right? So again, we had a break and a close here on the 27th of March, right? But we couldn't hold. We just collapsed right back under. Same thing here. Break, close. Great. Step three, couldn't do it. Collapse right back under. You want to hold above it as well. I usually have about a 2-3 day rule where if we get a breakout like this and we close above it like this, I'd want to see at least another like 2, maybe 3 days with a constant with the price action holding above that crucial support, now in theory support level, which in this case would have been the 21 EMA. So for instance, if this candle on Tuesday we broke above, right, and we closed above, that's step one and step two accomplished. But I would have liked to see the next couple of days, pretty much most of this week really, the price action to pretty much maintain above this 175 to high 174s-ish level, which is where that 21 EMA was positioned at. And I'd want to see it now turn that 21 EMA into support and now, consistently closed a few daily candles above it. That's what I would want to see. And we keep not getting that. Every time we keep getting these like false breakouts almost, like these bull traps. So that's what you really want to be seeing, in my opinion, for the 21 EMA, right? That's very, very important, right? With the 5 and the 13, you can see here on the daily chart, right? Still not crossed over, unfortunately, right? We got very close yesterday, but like I said, we didn't cross yet. And today we're getting a little bit of a more distance between the two. So, not really, materializing anything there just yet. So there is still some work to do for the bulls. But I think the point I'm trying to make is I think the setup here that we have right now with the divergences, with the breakout, there is the setup. The setup is presenting itself with the bulls and giving the bulls an opportunity to really start shifting this bad boy into a bullish momentum. The question is, will the bulls capitalize on it or will they just fumble the ball? That's kind of main thing I'm looking at, right? Also, we had very, very, very low volume today. Extremely, one of the lowest volume days we've had in, man, that's a long time, since all the way back here. On Friday, November 24th, 2023, so like 5-ish months ago. Right. So that's pretty important to understand. The fact that we're this low volume on, a down 2% day, I would argue is bullish. I would actually argue that that is a bullish thing, right? It doesn't mean it has to be, but it's definitely more bullish than bearish if I had to pick, right? So that's important to understand. But as we move over to the 4-hour chart, this is where things get a little bit more crucial and a little bit more important, right? And this is what I talked about yesterday, where we have these two kind of intraday-ish, not really intraday, but more like shorter term time frame levels, right? Where we have this level up here at 179, and we have this level down here at about 160, we'll just say 168.5 roughly, give or take, right? Which was that high over here from the previous days and the yesterday's low as well. As we've been making this high up here and this high down here, right? So this high up here around 183 and this low recently at 160, we made a lower high and a higher low. So we're kind of starting to get, a bit of that congestion, right? Getting tighter and tighter and tighter. Usually when you see this kind of, range bound, but also getting tighter, higher lows, lower highs, that implies that, we're getting into a pretty crucial level where once one of these levels, once that kind of pressure finally picks a direction and snaps, that's most likely the direction we'll continue heading out. So in this case, in my opinion, a break above 179 most likely will give us a retest of 183, which I think might finally break. On the flip side, of course, if we lose 168.5, which was this low here from yesterday, then I think at the very least we'll come back down to about the 160s and retest that. If not, potentially even, really truly start getting an actual risk of losing 160s and finally coming down to the 150s to 140s. Very real possibility. Like you cannot exclude that entirely. Like both of those are very, very, very real possibilities. And so far we have no real true indication giving us a hint as to which one it wants to pick. So that's important to understand. And it really requires patience in my opinion as of right now. One thing I will say though, moving over to options here very quickly, is the fact that, there has been, a lot of, mixed flow, of course, moving in with options. But one thing that I will note that, kind of caught my eye that gives me a little bit of worry moving into next week is this, right? Throughout the day, pretty much afternoon, We had a decent amount of put flow coming in for next week with a strike of 180. So it is in the money. So it's a little bit on the safer end, but nonetheless, a lot of money came in. 1 million, pretty much 1 million. I mean, pretty much all 1 million, right? Give or take. So that's a lot of money. Essentially 4 million coming in on puts for next week with an in the money strike of, 180, which it's not severely in the money, but it's, still in the money, right? That's a little bit concerning. I'm not gonna lie. What's going on with that, right? Like, where's that going, right? So Tesla most likely, Tesla's, you can see most bearish flow today by quite a large margin, right? 240 million bearish flow, which is quite a bit. So that is a bit of a concern moving into next week. And again, they're very, very short term. This is not like months out or, even a leap out, right? It's like a year plus or whatever. This is next week. That's a little concerning. So we'll see how that plays out. I'm sure the people that, bought these aren't very happy right now with this price action after market, but there's a lot of time for that to correct itself potentially. So that's kind of the main thing I'm looking at right now, ladies and gentlemen. Obviously we have the max pain for Tesla for this week. We're sitting at 172.5 and we closed obviously pretty darn close to that. The max pain for next week, believe it or not, is 175. So don't be surprised if we really do a whole lot of nothing next week, ultimately overall, like averaged out essentially, and we close somewhere close to 175, give or take a few dollars. That wouldn't shock me as well. But yeah, all in all, that's kind of what I'm seeing. That's kind of what I'm expecting. So let me know what you think down below. Ladies and gentlemen, if you enjoyed the video, don't forget to hit that like button. And yeah, we're trading right in the middle of the band's reversion, or the regression rather line. There's really not a whole lot happening. Even on the 1 hour chart, we're kind of dead smack in the center. Daily, we're dead smack in the center. So there's no real direction being picked here until we really start getting to one of these more kind of extreme levels, which I'll update you guys, of course, with the videos. But my members, of course, will get it pretty much as I see it instantly. So if you're interested, link down below, just $2.99 a month to subscribe. But with all that being said and done, thank you so much for watching. Hope you have a great weekend, and I'll see you tomorrow or Monday. Peace.